The market has continued to surge through the coronavirus challenge, even as cases continue to spike around the US. The next challenge the market is going to face is going to be the upcoming earnings season, which some analysts are predicting could be the worst in over 12 years. In this week's video, our team's going to touch on the returns from last week, look at some interesting charts with both gold and silver, and cover what to expect for the upcoming earnings season. Last week, the market started off strong on Monday and never looked back, with the non-manufacturing PMI report that came out on Monday morning. This report showed the biggest monthly gain that the index has ever seen. This report measures the service industry growth here in the US, and back in May, the numbers showed that the service industry was actually shrinking a little bit, and that index reading was at 45. Expectations were that the non-manufacturing PMI index would come in around 50 for the month of June. But it blew out expectations and actually came in at 57.1, showing rapid expansion in the service sector. This led the S&P 500 to be up almost 2% for the week. The NASDAQ was up 4% and still leads the way for the year, up almost 20%. The Russell was the lagger, as it has been for years, and actually was negative for the week, and is still down over double digits. Foreign and emerging were both positive, with emerging markets being the best performing index from the week, up 4.5% on the continued good economic data that we're seeing from China. And that index is actually pushing to be positive for the year now.
Mike Tedeschi, Wealth Management Advisor, with this week's chart breakdown video. We're going to take a look at the precious metals, gold and silver, and we're going to start with a monthly chart of gold going back to 1993. And what we're going to see here is the highest monthly close that gold has ever had was back in August of 2011, and that close was at 1827. We actually touched 1829 last week, and last month's close was right at 1798, which was the highest in 9 years. So gold has put together a potential major cup pattern here, and you can clearly see price fell down, was able to hold this zone, and then we had a breakout last year, and we've subsequently have followed through this year. A move any higher would put us at that highest monthly closing price of all time for gold. And when we take a look at sister metal, silver has not come back nearly the same way that gold has. Silver's high back in 2011 was all the way up at almost $50 an ounce. And where we're at right now, we're at $19 an ounce. And silver has traded really in this 14 to 18.5 range here, really since 2015. It's kind of been trapped inside here, and we had one spike back up just a little bit over 20 back in 2016. But silver's on that potential breakout from that 19 zone to test that 21. Over that, silver has a lot of room to run. So we continue to take a look at the precious metals as they have built some really large bases. Gold subsequently broke out last year and it's continued to follow through. It is pushing towards those all-time highs, and silver has the potential, if it does get up just a little bit higher here, to finally make a large move in the silver space, which many of the silver bulls have been waiting for quite some time.
Earnings season is about to kick off this week, and it's going to start with the big banks reporting, as it always does. Now, this is going to be a pivotal earnings season, as it's going to be the report from the second quarter, which was completely impacted by the shutdowns and lockdowns across the nation due to the coronavirus pandemic. Now, according to FactSet, which surveys analysts from around the industry, analysts are predicting that S&P 500 companies are actually going to lose about 45% of their overall revenue from the second quarter. This would be the largest drop that we've seen since the 2008 financial crisis that showed a 67% revenue drop. Now, if we can see any sort of positive news from the S&P 500 companies over the next couple months of earnings season, that could be the catalyst to push the rest of the indexes higher to try to catch up with the NASDAQ. And we could finally see some money being rotated out of the tech sector into other industries. Now, I just wanted to follow up on a story that we did last week about the CDC changing the epidemic status of the coronavirus. And the numbers actually showed that it is below epidemic status, and the number of deaths that occur on a daily basis is down to about 5.5%. But the CDC decided that they were going to keep the coronavirus in its epidemic status until at least next week, because the number of deaths at the beginning of the week were about 200 a day, and they ended the last 3 days of the week in the 900s. So they're going to continue to monitor that situation at least for one more week. This week ahead, we have about 8% of the S&P 500 companies reporting their second quarter earnings. Hopefully we can get a couple good surprises there. Thanks for watching, and if you find this content valuable, please subscribe to our YouTube channel and follow us on Facebook. See you next week.